Right. Hello, everyone. Welcome to the Fintellect ABA webinar on driving more effective enterprise-wide MLTF risk assessment. Um, Ekta and Anthony, can we have you online, please? All right, fantastic. Okay, so I'm delighted to see that we have over 1,200 people from around 43 countries registered for the webinar today. And I thank all of you for participating. I think many of you are attending live and the others will probably see the recording. Also, it's being broadcast on YouTube. So if you have any issue logging into Zoom, you'll be able to see it on YouTube. For those of you that haven't met me yet online or in person, my name is Shirish Pathak. I head Fintellect, and it is my pleasure to be the host and moderator for the webinar today. At the outset, a huge thanks to the Asian Bankers Association for partnering with Fintellect again for this webinar, especially to our friends there, Meg Moreno and Amador Honrado. To start off, I would like to welcome our speakers, Ekta Singh, Regional Head of Compliance, Shuttle One, based in Singapore, and Anthony Quinn, founder of Arctic Intelligence, based in Australia. Ekta and Anthony, welcome. Good to see you both online today, and thanks for joining.
Thanks, Shirish.
Thanks, Shirish. Thanks for having us.
Great. So a brief background about our speakers before we start off. Let me start with Anthony. So Anthony is the founder and CEO of Arctic Intelligence, and Arctic is an Australia-based but globally focused RegTech firm that was founded in late 2015, and it specializes in audit, risk, and compliance software related to financial crime compliance and risk management. In 2020, Arctic was awarded the Australian-founded RegTech of the Year and RegTech Exporter of the Year by the Australian RegTech Association. Before founding Arctic Intelligence, Anthony spent over 20 years as a management consultant responsible for implementing a broad range of transformation initiatives across a number of retail and investment banking clients in the UK, Europe, Australia, and the United States. Ekta Singh is the regional head of compliance at Shuttle One, a blockchain-based lending platform in Singapore. She is an ex-banker, recognized as a professional with great business acumen and personal integrity. Business management, AML KYC, financial crime compliance, onboarding, AI, and machine learning are her areas of interest, and she has led teams with diverse cultural and linguistic backgrounds in different banks that she has worked. And Ekta is also an empanel trainer at Fintellect. We will copy the links to the speakers' LinkedIn profiles also shortly in the chat window so that you can look them up and connect with them if you'd like to. So the format for the session today is we will have two presentations. The first presentation will be made by Ekta for about 20 minutes and then by Anthony for about 20 minutes. And after that, we will have about 15 minutes for Q&A from you, the audience. So post whatever questions that come to your mind in the Q&A window, which is at the bottom of your screen, and we will take it up at the end of the webinar. As usual, participation certificates will be emailed in around a week's time to all of you. For some reason, if you do not receive your certificate within a week, please write to us at contact@fintellect.com and we will sort that out. Again, as usual, the recording of this webinar will be available later on the Fintellect YouTube channel in case you want to see parts of it again. So now coming to the topic of discussion today, I mean, enterprise risk management has become increasingly important for all organizations now since the risk and threat landscape is continuously evolving and that too very fast. Institutions themselves are, in the words of Arctic, like living organisms that evolve constantly because they could be launching new products, entering new industry sectors or geographical markets, pursuing new customer segments, and growing organically or through acquisition. At the same time, regulatory expectations in all jurisdictions, or let's say in most jurisdictions, are becoming more complex, and regulators are also becoming more demanding. And even before one manages the risk, one has to measure the risk because, as the saying goes, you can't manage what you don't measure. And, not just do it for the sake of doing it, but really make sure it is done effectively and efficiently and put in the right systems and processes to help with this. So our two speakers today are going to share their thoughts around this subject. Both are very experienced on this, and may I now invite Ekta to start off with her presentation. Ekta, can we have you up?
Thanks, Suresh. Thanks, and hi, everyone. I would just share screen. Perfect. So let me. I think we all. Perfect. So as Suresh mentioned.
Ekta, we just need to put it in slideshow mode if possible.
Oh, okay.
Yeah.
Just give me a minute. Is it visible?
Yeah, that's fine. Thanks.
Perfect. So, hi, everyone. I'm Ekta, and I would be talking about EWRA, which is Enterprise-Wide Risk Assessment. And what I see that we have a kind of a huge variety of audience of people ranging from a vivid, I would say different organization, different backgrounds, and that makes this topic more interesting and more relevant. So welcome everyone. So today, as we said, as Suresh also mentioned, that we are going to discuss about a topic that is very crucial to the success of any organization: enterprise-wide risk assessment. Now, you might be thinking risk assessment, that sounds quite boring and, but let me tell you, that's anything but boring, because in fact, it is more challenging, it's more exciting aspect of managing the, our organization. So today, what I'll be covering is basically a brief intro about what exactly is EWRA, how and why we feel any organization should have this. There is a difference between how it was, traditionally what was risk management all about, and now why EWRA is different from its traditional approach. What are the challenges and benefits that we face while we are doing this, and when we are evaluating, what all should be kept in mind, what are the procedures that we should follow, and why it is important that even though when we have this risk that is there and we put certain control measures, how are you then managing your residual risk, which has to be many a times firms would like to have it at a low. And then since I'm based out of Singapore, I'll just, if the time permits, I'll just briefly touch up upon certain guidelines, whether it is from FATF, whether it's from ISO 31000, as well as the MAS guideline. So as I said, what exactly is EWRA? So it is a process of where we identifying, analyzing, and evaluating all the risk that an organization faces, from the financial, operational to strategic. So why it is important? You'll ask me that why do we need to know about EWRA? It is basically without having a very comprehensive understanding of your own organizational risk, you are just flying blind, right? You could be hit by any unexpected loss, or maybe loss of valuable data, even face any legal or financial action. So by conducting an enterprise-wide assessment of your risk, you are basically very proactively taking steps to manage this risk and ensure that there is a long-term success for your organization. So this approach where we talk about enterprise-wide risk assessment, it gives a very holistic view of the risk appetite, and you implement, once you identify the risk, you implement an effective risk management strategies. And that's very crucial for a long-term success of your organization. So, sorry about that. Now, then you'll say, okay, Ekta, you're telling me that it's a very comprehensive, enterprise-wide risk assessment. EWRA is a very comprehensive statement, or for financial crime risk management at an enterprise level. But there would be certain pros and cons for it, because if we measure, we see that we are kind of trying to minimize the the losses, because we are proactively planning our resources or everything to curtail that risk effect. So this is one of the pros that we see. It also, and now because it gives me a holistic view at a management level, I can absolutely have a kind of a 360-degree view of what exactly is going on in my organization and what are the risks that are faced. So as a management, it allows me to quantify my risk, and then I can assign the dollar terms to curtail this. Then I'll protect my company, or better utilize the resources of my company in certain way, so that I am mitigating the overall risk. But however, there are certain, I would say, cons as well. That means we are relying heavily on the estimates, because we're just assuming, what if this risk happens? So sometimes when the actual risk happens, it's very difficult to perform, because we cannot predict the unpredictable, right? The black swan event, like COVID. None of us were prepared. We never knew that there would be a time where webinars would be so much of an in thing. It was always a physical conferences. So there's certain, we cannot predict certain unpredictable. And there are certain, while we are doing our assessment of the EWRA risks, we may underestimate a risk, or the magnitude of the effect of that risk. And that way, we would be too overconfident to deal with the risk, when that risk we are exposed to, we are not able to handle it. So these are certain pros and cons of it. But then let's talk about how traditional and EWRA are slightly different. So when we are talking about EWRA, we already said that it is a very comprehensive approach when we are identifying, analyzing, and managing the risk across the entire organization. Unlike other type of risk assessment, that focuses on a very specific area of function within an organization, EWRA, it takes a very holistic view of all the potential risks that could be there, right? Another key difference that we see between traditional and the enterprise is what is the scope of analysis, right? While traditional risk assessment, it will only examine the specific department or a process or the procedure, whereas enterprise-wide risk assessment, it looks at the organization as a whole. What is the culture, the governance, the structure? What is the external factors like the economic trends? What is the regulatory changes that is taking place, or what is the regulatory requirement, and how you want to implement it? So a very broader view of the risk. Now, when you see there are certain very key differentials that I have put in, whereas holistic or more soiled, whether traditionally we see that the traditional approach was very risk averse. The management tends to be quite risk averse. Vis-a-vis now, it's enterprise-wide risk management. When you're doing, it's basically more the risk appetite has grown. Again, traditionally it was more, I tend to be reactive. You're reacting when the situation or any risk has occurred, whereas when you're conducting EWRA, it's more proactive approach to the risk management, using a combination of what is your people, processes, and technology, leveraging the technology. Lastly, we see that there is certain insurable versus uninsurable trends. Like traditionally, the focus was on risk that are insurable versus non-insurable risk. Now, certain risks are uninsurable, which we have seen. So when we are doing EWRA, that's what we are focusing more. Now then we do see that then, okay, fine. Now that we know that there is EWRA, what exactly is EWRA, and then what is the traditional as well as the traditional approach and the new approach, then what are the benefits and challenges? There are benefits and challenges also associated with it. It cannot be that anything that or any process comes without its I'm sorry. So what are the benefits when we talk about benefits? Now, one of the key benefit of conducting an enterprise-wide risk assessment is that it enables an organization to identify and then you prioritize the risk across all areas of business. Now, this will help me as an organization or organization as a whole to develop a more effective risk management strategies that are there, allocate the resources in certain way, and then make a very more better and an informed decision that I'm taking. Another benefit that that we see here is that it helps an organization to improve their overall resilience and agility, because you are identifying the risk, you are kind of identifying the vulnerabilities that an organization faces. So you develop the contingency plan, the business continuity plan, and how do you mitigate that accordingly. Now, once you have these strategies, then you are armed to respond in a much more efficient way and more effectively when such scenario occurs. So you're reducing your financial losses, you're gaining the competitive advantage, you have more operational efficiency is increasing, and in that way you are gaining a competitive advantage vis-a-vis your other other players in the market in the same industry that you're playing with. But there are certain challenges as well that what we see that is there. Or now, when we talk about challenges, one of the main challenge that organization faces when you are conducting an EWRA is obtaining a buy-in from all the stakeholders. So when we talk about EWRA, remember we are talking about it having a holistic view. When we are having this holistic view, that means all the departments, all the processes, everything is taken into account. That means each stakeholder needs to be involved in it because they know the risk better. So obtaining a buy-in from all the stakeholder is definitely a challenge. And this is very, very difficult because each department may have a different priority and they may not see the value of the risk that the other department may be assessing. So it's very important to communicate the benefit of this risk assessment and involve all the stakeholders. Other challenge is to ensure that this assessment is comprehensive enough, or it covers all areas of the organization. Now, this can be quite daunting task because if you're suppose if you're a very, very large organization, there's a complex structure, gathering those data, ensuring that everybody understands this is quite daunting. So then the accuracy or the completeness of data is another issue that we face, because if there is data that is not accurate, then your assessment would not be correct, and that would lead to poor decision making. It's also that the data requirement. You need people generally, it's very difficult to identify and assess the risk across the different business units. So there are a number of risks, both internal and external. So and some risks are too complex, and they are interlinked. Hence, it's very, very difficult to understand what would be the impact of that risk or the likelihood of occurrence of that risk. The other challenge that we face is not all company is that big enough or resource they can allocate resources to do that. So there is a limitation on the resources, how much time and personnel can be devoted to it, what would be the infrastructure, the technology, or the budget. So these are certain challenges that we face when we are doing an EWRA, especially now. The last one we can talk about the regulatory complexities, because regulatory requirement at times can be quite daunting and very complex to understand. So we need to ensure that these challenges we understand in a better fashion. So these are the risks. When we talk about the risk EWRA, how do we assess? So first we identify this risk. Once you have identified, you do the gap analysis, fill that, and then accordingly plug in the control measures. So here, as we see, we are talking about the planning, identification, the risk assessment. And then once you have assessed, then you need to constantly monitor it and then plan how you're going to react to it. These are certain examples that you see how you're doing the risk management. What are the type of risk? How do you identify it with regard to the cost, the environmental, the scope, the time? And how do you assess this? Do you think that this risk would be a high risk, a low risk, or a medium risk based on the probability of its occurrence? What would be the impact of it? And how would you detect it? And of course, the monitoring aspect of it, where you can definitely monitor as to how periodically you want to assess those risks. Now, how would you like to respond to this risk is again an important thing that we need to see. We can have it in a more negative way or an active way, where you kind of you avoid the risk, you want to bring in new and more effective internal controls, you want to enhance it, or you want to take it in a positive, in a negative stride, where you just want to transfer it, right? You can just say that I just want to transfer the risk covering through the insurance, or there is a risk acceptance which will lead to the what will be the risk appetite of the firm. So in that case, we'll talk about the certain standard, which is like ISO 31000, which is 31,000. So which is an international standard which is developed by the ISO, and which provides the guidelines of implementing effective risk management across all the organizations. So it talks about regardless of what the size, the industry, or the location, this ISO standard is applicable to all type of risk, whether it's strategic, operational, functional, or compliance risk. And the key takeaways of ISO 31,000 is that you need to have this risk-based thinking, how, when you're identifying and assessing, how you're integrating all aspects of the organization activity, you're communicating and having a collaborative effort, and what is the ongoing process. So this is, and as I said, with regard to MAS, which also talks about, MAS is a monetary authority of Singapore, and it has also emphasized on having a risk-based approach, where we talk about your EWRA should have a consistency of scope. It has to align with your risk appetite. What are the data that is available, how accurate those data are, and how you are able to communicate properly with different stakeholders. So that's how we come at what would be our desired outcome, where all the senior managements are involved in it, where you have a very sound and a systematic framework to assess what is your inherent risk. So then only you'll be able to have a complete overview of the risk that your organization is facing. So in conclusion, what we can say is that it is a very, very crucial process for any financial institution, where how you identify and manage the risk across the organization. And I'll be happy to take, I'm sorry if I have exceeded any time, but I'll be happy to take any questions.
Thanks, Ekta, for that presentation. I think no, you're bang on time, so no problem about that. We will take questions together after Anthony's presentation is done. But before I invite Anthony to speak, can we run our first audience poll? Can we have that up, please? All right. So, audience, we would appreciate if you can answer this question. When is the next enterprise-wide AML CTF risk assessment scheduled to take place in your organization? And if you don't know, that's fine. You can just write, I don't know. Also, I think we've had a few questions in the chat whether presentations are going to be shared or not. So yes, we will be sharing presentations, access to the presentations on Fintellect Academy after the webinar is done. Each of you will receive a link via email. And we also had questions in the chat asking whether viewers who are seeing this webinar on YouTube will get certificates. So yes, they will also be eligible for certificates. So don't worry about that. Okay, let's maybe have enough for the poll. Okay, so here are the poll results, Anthony and Ekta, just for your reference. So I think 1/4 of people have this as an ongoing exercise, about 8% within the next 3 months, so about 20% totally in the next 6 months. That's sort of an indication as to where people are in this whole exercise. Okay, with that, great. Anthony, may I now invite you to please start your presentation.
Thanks, Suresh. Thanks to Fintellect and the Asian Bankers Association for hosting this webinar and for everybody participating. As Suresh mentioned, I'm the founder of a regulatory technology firm based in Sydney that spent the last sort of 7 years specialising in developing technologies for enterprise-wide risk assessment. So we have actually developed 2 platforms, one specifically for small to mid-sized businesses, and as well as another one for complex businesses. And in that experience, we've engaged with hundreds of clients in over 20 different industry sectors and 17 countries and counting. And so what I'm planning to do with the 20 minutes that I've got is to basically explain some of the top 10 key challenges that we have come across, really just to kind of like set the scene in terms of some of the practical challenges that people face, as well as to kind of like set the scene really for the Q&A session. So if people do have questions as we go, please throw them into the chat. But first I wanted to do was to kind of set the framework around enterprise risk assessments, really building on what Ekta was talking about. So from a from a FATF perspective, there's really 2 main points that they make. The first is really guidance for FATF member countries. So FATF have an expectation on countries, and there's over 200 FATF member countries that they will conduct a national risk assessment looking at the risks from a country basis, and not just one-off but on an ongoing basis. And the reason for that is that it should really drive the measures that they need to implement AML risks within their country. And FATF go on to kind of illustrate how important the risk-based approach is in terms of effective implementation around the FATF standards. So that's one of the key things from the FATF. In terms of the second piece of guidance, it's really specifically aimed at regulated entities. So obviously, as Ekta's talked about, we regulated businesses must identify and assess their risks. But there's also a few key points that they make. So They should document the risk assessments. They also need to be able to demonstrate those risk assessments. They need to keep them up to date, and they need to provide them to regulators. So those quite key, kind of powerful things. Often when I'm talking to people about what I do, talk about risk assessments, instant reaction is usually, well, that sounds quite niche. Well, it's very far from niche, really, because there's 200 FATF member countries. There's over 30 industry sectors that are regulated, which translates to millions of businesses. So broadly, the sectors that are impacted, obviously, financial institutions, which is broadly banks, and then non-bank financial institutions like stockbrokers and money remittance businesses, payment processing services, and crypto and other businesses. And then you've got non-financial institutions. So it obviously applies to gaming, including casinos, online gaming, physical gaming venues like hotels, pubs and clubs, as well as professional gatekeepers like lawyers, accountants, real estate agents, and in a lot of countries applies to high value goods dealers, so art dealers, auctioneers, jewelers, pawnbrokers, and so on. So obviously each country is different in terms of the pace at which they have expanded their laws, and in fact Australia is probably one of the laggards in this regard, in the fact that it's still yet to regulate the tranche 2 sectors, which is kind of the subject of a parliamentary overhaul at the moment. So just having set the scene, what I want to do now is really just talk around some of the top 10 challenges, and by no means there are a lot more than 10 challenges, but these are sort of synthesized into the top ones that we hear from our clients. So the first one is really defining the risk appetite and risk tolerance. So this is all around having a proper conversation with the board and senior executive around what their risk appetite is. Now, I expect that if we all went back to our boards of the banks that we've worked at or work at now and said, what's your appetite for organised criminals laundering money through our business? And I bet the answer would be, we've got zero risk appetite and zero tolerance for that type of activity. But that's just not realistic. Unless people want to sort of shut down all the customer accounts and start offering products and services, there's definitely needs to have a discussion around the risk appetite. So obviously the risk appetite is really the amount of risk that the organisation is really willing to achieve, to accept, really, to achieve its objectives. So in other words, the maximum amount of the residual risk that it has after the fact that all of the mitigating controls have been applied, that's really, is that risk appetite in line with what their expectations are? And do they have tolerance for deviations to that? And so really this is about having a conversation with people to really understand, where do they sit on that risk spectrum, and is there a common understanding of risk in the organisation? So the next challenge we see is really around defining which risk methodology the organisations should use. And there's no real right or wrong answer for this. There's no real prescription around the risk methodology, and there's no one size fits all. In fact, most of our clients have a completely different risk assessment framework and completely different methodologies. And part of the technology that we have helps to kind of change the methodology based on those specific requirements. But there's a whole bunch of considerations that organisations need to look at, and we'll dig into these a little bit more shortly. So some of these things around, should the methodology be question-driven or subjective, or data-driven, objective, or a hybrid of the two? Should they basically build a model from scratch, or are they inheriting or replicating existing models? How do they go about assessing the inherent risk, looking at, what is the likelihood and what is the impact? What are the rating scales that they should be using in the methodology? How should they assess control effectiveness, looking at control design and operational performance of those controls, and about how to essentially assess and reduce residual risk through kind of strengthening controls. And one of the other key things, and this goes back to the sort of the FATF point, is really around the importance of documenting the methodology and the rationale. So whilst there's no right or wrong answer, most regulators expect, you know, an enterprise-wide risk assessment to be logical, to be kind of basically comprehensive, explainable, and essentially defendable to the organisation. So the next challenge we see is really the fact that most risks and controls should be appropriate and proportionate to the nature, size, and complexity of the organisation. Well, what does that actually mean? So obviously, it's about right-sizing the controls in relation to the risks that the organisation faces. So the types of things that people should look at and examine is really, you know, what is the nature of their business? What does it do? How does it make money? What products and services does it offer? What types of customers is it dealing with? How does it acquire those customers? What countries do they operate in? You know, how big is the business? What's the size of the business in terms of, you know, the customer base or the revenue, or, you know, how many staff are employed? And what's the complexity of the organization? Is it, you know, a single country business with one product line and one customer segment? Very simple. Or is it, you know, hundreds of products operating in hundreds of markets across, you know, lots of face-to-face and non-face-to-face channels? You know, how to actually build a control framework that's appropriate to that. The next challenge, we touched about this before, is around subjective and objective, or a hybrid of the two. Now, obviously, a lot of risk assessments that are subjective or question-driven, you know, they're challenged or criticised because, you know, they could introduce, you know, bias, or they might be opinion, not fact-based. Whereas objective data-driven approaches, you know, they might be more fact-based, but there are challenges in them in terms of, can you obtain the data? And if it's purely data-driven, objective, you know, are you missing some subtle qualitative elements? So a lot of our kind of risk models have like hundreds of different risk indicators within those models, and they tend to be a combination of data-driven, objective risk indicators, where, you know, we're trying to source, you know, quantitative information like percentages or numerical values, and whereas others are more kind of qualitative. So a hybrid approach is typically what our clients adopt. Probably the next challenge is really around, you know, what risk groups, categories, risk factors, and risk indicators to use in a model. And so obviously we've seen a lot of the guidance that the FATF and local regulators give really talk around, you know, looking at customer risk, looking at product and services risk, channel and country risk. But we believe that this can go a whole lot deeper than that. So typically what's not covered by regulators is looking at things like the environmental risk. So what is the vulnerability that an organisation has to different types of predicate offences or money laundering offences, you know, sanctions, proliferation financing, and regulatory compliance risks. You know, some of the customer risks that are prescribed typically talk about customer types and PEP, you know, politically exposed person status and source of world, but they don't always talk about location of customers or the nature of business activity or the risk of those industry sectors and occupations. And they often miss out business risks. So looking at the geographical footprint of an organisation, you know, the extent to which controls are outsourced to third parties, or the risks associated with employees engaging with customers, for example. So really just deciding, you know, what risks should you be assessing, and what is the hierarchy of those risks, and deciding what to include and exclude is as important. This is just an extension of that, looking at some of the channel risks in terms of how customers are engaged, you know, through face-to-face, non-face-to-face channels, use of intermediaries. Obviously, lots and lots of products and services that are offered. We've got about 250 different products and services in our product. They've all got different product features and different attributes that make them more or less attractive from a money laundering perspective. We're really trying to understand the characteristics of those products and how they're used in the organisation. as well as having a robust framework for assessing kind of country risks. There's lots of different sources. There's lots of challenges around the methodology and the rating scales that those sources have. How do you actually normalize that to come up with a country risk rating is a typical challenge that our organisations face. So the next challenge I want to talk about is around whether or not all risks should be treated proportionally or not. And this is all around weighting. And it's not just about risks, it's about control. So, should some risk groups be more important than others? So should customer risk be more important than product risk, or less important than channel risk, for example? Within each of those risk categories, how obviously different customers have different risk profiles or risk exposure to an organization. How do you actually apply proportionality throughout the risk model? But also, how do you actually apply weighting to controls? Like, some controls are more important than others. They're key controls. They should carry more weight in terms of a risk assessment. And also looking at that from an assessment unit or a business unit perspective. Which business units from an enterprise perspective, may present more significant risks. So it's really looking about, in that methodology, how do you apply a proportionality or weighting into the risk assessment. So the next challenge is really looking at, so you've assessed your inherent risk, but how do you actually assess the control design and operational effectiveness? So control design really is around looking at whether the controls that you've got in place are fit for purpose and help to mitigate and manage the risk. Whereas control performance is looking at about, how well is that control performing relative to the way that it should be performing, based on how it is designed. And then control effectiveness is really looking at just how effective a control is. So, deciding how you go about doing control design and operational effectiveness testing, how you go about sample checking, what rating scales you use, how you map your risks to controls and controls to risk, that can become quite a significant challenge for a lot of organisations. So the next challenge we see is really how to aggregate all of these risks together. So, most organisations are very complex. They have multiple lines of business. They might be doing multiple different types of risk assessment for AML, for bribery, for fraud, for sanctions, for human trafficking, and others. They might be doing them at different frequencies and so on. But how do they actually roll these risks up across the organisation? How do they take the answers in a risk model based on different risk indicators that might roll up to different risk factors, or roll up to categories or groups, or roll up to an assessment or business unit level and an enterprise level? That can be very complex from a reporting perspective. So having how to figure that out is something that obviously technology can play a very significant role in, which kind of really brings me on to the next challenge, which is, how does an organisation decide what system that they use? And probably 90% of the clients that we talk to, and that includes some of the 90-odd% of the professional advisors that advise them, are still using spreadsheets to conduct complex money laundering risk assessments. And obviously I'm biased because I'm a technology provider, but Excel has a lot of limitations. It's very difficult to capture, rationale or field level audit trail or workflow as, you're assessing risks, or it's very difficult to, attach documents to evidence control testing. It's very difficult to kind of aggregate that information up into kind of real-time dashboards. And a lot of these things are, second nature from a technology perspective. And finally, this kind of talks to Shrish's point at the beginning, is really, how do you keep things up to date? So we all work in an environment that is constantly changing. So from an external environment perspective, you've got regulations that are changing, rules and regulations and typologies. The threats and risks are changing based on kind of how organised criminals are operating. Obviously, the country risk exposures are continuously changing from an external perspective. But obviously, there's constant change internally as well. People launching new products, going after new customer segments, new markets, engaging with third parties, merging their businesses, acquiring other companies, and so on. So how do you keep the risk assessment current and maintained? And so really, these are just kind of thought starters, and I just was hoping that we can sort of throw it into the Q&A, and happy to take any questions. But thank you all for listening.
Thanks, Anthony, for that presentation. Before we move on to the audience Q&A, let's just run another quick poll. Can we have the second poll? Now, this is more like a yes and no question. All of you have heard Anthony speaking, and obviously Arctic is a RegTech firm. Fintellect has also partnered with Arctic to build some of the content templates, and we are helping Arctic with the go-to-market strategy. So if any of you would like to see how the Arctic tool works, please answer this question, and either Anthony or Mark or somebody else from his team will get in touch with you. For those of you who are watching this on YouTube and who are not able to answer this particular poll, feel free to contact Anthony on LinkedIn directly or write to us at contact@fintellect.com, and we will let him and Arctic know that you're interested in this. So while the polling happens, let's start thinking about the questions. Anthony, there is one question which I would like you to take after Ekta answers this one question. And Anthony, the question which I would like you to take is by Minesh Bundu, who's from Bank of Mauritius, which is the regulator in Mauritius. And his question is, from a supervisory or regulatory perspective, what are the key points or areas that need to be assessed to ascertain that the EWRA for AML CFT is comprehensive? So while you think about the answer to that, let me pose another question to Ekta, which is from Mohan from the Sri Lanka Savings Bank, who says, is there any specific approach to assess the EWRA? So Ekta, maybe if you can start off with answering that one, and I'll ask Anthony to jump back on for the next question.
Yeah, thanks, Suresh, and thanks. That's a great question, because it all depends, as we're talking about risk assessment. A lot depends on the risk appetite of that organization. So there are a number of approaches that you can take when you're assessing the EWRA AML. And some of the common approach is the risk-based approach, where we see that you're identifying and assessing the risk that is associated with the AML, which is the anti-money laundering. And then once you assess those risks, then you prioritize, and then those risks are prioritized, the controls are implemented to mitigate this risk. Second approach can be compliance-based approach, where you focus on ensuring the organization's AML compliance program, whether that program is compliant with the relevant laws and the regulations. And the compliance requirements are then assessed and controls are implemented to ensure that compliance is there. The third approach would be more of an integrated approach, where you combine the risk-based as well as the compliance-based approach, where you when you're identifying the risks and assessing it. And then the compliance requirements are assessed to ensure that there are sufficient, you have sufficient control measures put in place to mitigate. But whatever approach that you use, there are certain key factors that need to be followed. Firstly, you need to identify the risk. That is key, regardless whether you're following a risk-based or compliance-based or integrated. You need to identify what are the potential risks that is associated with the AML. How do you assess those risks is again very important, which involve the likelihood, what is the likelihood of that risk to happen, or the impact that it will have. How do you mitigate those risks is again important factors, which again we talk about the controls to reduce the likelihood of each, and what would the impact be. And then The lastly that I also talked about in my presentation is about the monitoring and the review, that you should constantly monitor and review your process on a regular or a periodic basis. That what are the controls that you've put, the effectiveness of your AML program or compliance program. So that's very important.
Thanks, Ekta. So just continuing on that, there was another question, and sorry, Anthony, I'll just come back to you after this particular question.
Yeah, right.
So there's a question from Nadine, Ekta. Should this exercise be done by the risk manager or compliance manager or both? Because this is sort of related to what you just spoke. So can you just address that one as well?
This is fantastic question, because again, when we are working, especially when you're working in bank or a bigger organization where we have a risk department, compliance department, we have different stakeholders. So when we talk about enterprise-wide risk assessment, it is to be done in a much more holistic way, so that the management has a kind of, as I said earlier, you need to have the 360-degree view of the risk that the company would be impacted with. So this EWRA AML exercise should be conducted by a team of professionals with the expertise in the risk management and the AML compliance. So the team should have the representative from the risk management, legal, and the compliance department, because these are the teams that are responsible for leading the EWRA AML exercise, because they have a deep understanding of the organization business activity. You gather from as I said, from the different stakeholders, the business heads. They talk about the risk that is associated with it, and they are familiar with what are the best practices, what are the best regulatory or what are the regulatory requirement that is there. Compliance manager, on the other hand, would be the one who would ensure that these EWRA AML exercise is conducted in accordance with the regulatory requirement. So they are responsible to develop and implement the controls that is identified as kind of a necessary to mitigate those risks, whereas the legal department will then talk of providing the legal advice on this EWRA exercise. So they are also responsible to ensure that the controls that you are implementing, they are compliant with the regulations. So you need to have a team of professionals with the expertise in the risk management and the AML compliance space to conduct prima facie. So that's where the benefit of all these professionals in an organization can be collated. That's where this exercise would be more comprehensive from all the angles.
Thanks, Ekta. Okay, Anthony, coming to you now. Let me just repeat the question for the benefit of the audience. So this question is from Minesh from the Bank of Mauritius, which is the regulator in Mauritius. From a supervisory or regulatory perspective, what are the key points or areas that need to be assessed to ascertain that the EWRA is comprehensive?
My answer might be a bit controversial here, but the thing that really amazes me is the fact that a lot of the regulatory bodies give some guidance, but they don't really adopt kind of technology. And what I mean by that is, you like in Australia, for example, you've got 17,000 regulated entities all coming up with their own risk-based approach that could be using completely different methodologies, completely different sort of approaches to conducting risk assessments. And really then it's incumbent on the regulator to essentially understand the methodologies that have been in place, understand how, whether that framework is robust, whether they've assessed the risks properly, whether, to me that actually does not make any sense. And we have actually had a lot of conversations with regulatory authorities that are looking at adopting technology so that they could actually roll out a platform like ours where organizations can assess their risks and the regulator can essentially see real time the enterprise-wide risk assessment being carried out. And so they can use that then for, supervisory focus or enforcement or what have you. But it really doesn't make sense that there is no standardized approach. I think there really needs to be one. So that's kind of one point. I think the other thing that I think a lot of regulators are very tolerant on is just the amount of time that it takes organisations to complete these risk assessments, because 90% or more are doing these on spreadsheets. They're very manual processes. They're taking like 9, 12 months or more typically to undertake, which means that by the time that the risk assessment is presented to, the boards, they're typically out of date, out of touch with what is actually really happening. And it just means that people are managing the process behind a risk assessment. They're not managing the risks. And I think that is a fundamental issue. And we see it time and time again with regulatory enforcement action where, at the heart of this is around a very poor understanding of risk management and poor execution of the risk assessment.
Thanks, Anthony. Okay, on another question for you, Anthony, and based on your given that you meet so many customers globally, this has to do with an ideal budget. So to mitigate the risk arising out of risk assessment findings, what would be an ideal budget that needs to be allocated each year?
Well, that's like how long's a piece of string, but I think, typically, like just picking up on some of the point, like there's millions of regulated entities out there, right? Like some of them are well resourced, they are banks, they've got compliance teams, they've got risk teams, they've got experts. But that's probably 75% of the market is not that. They're small businesses in lots of different industry sectors with who frankly lack the capability and capacity to bring those skills in-house, and they lack the capacity to go and hire the consulting firms or others to support them. So we like even small businesses have the same obligations as large businesses in terms of the risk assessment, and that's really where we believe that technology can play a role in terms of helping those businesses that can't afford those things to cost effectively manage those risks. In terms of like what's the budget to kind of remediate or rectify, I can't comment. Every organisation is completely different. It depends on the risks that they have, and also the amount of investment or underinvestment that they may have made up until that point. So it's kind of a hard question to answer.
Thanks, Anthony. So you mentioned limited resources, and we have a question for Ekta around that. Which says, how do you overcome the challenges such as complexity of assessment or limited resources? So we have about 3 minutes left to close the webinar. So we'll let Ekta have the last word. So Ekta, this question is for you. It is, how do you overcome the challenges such as complexity of assessment or limited resources?
I think when you're conducting the risk assessment, there are certain complexity and the resources are limited, as what even Anthony mentioned, that it depends on the size of the organization. Not everybody would have that. So a few of the ways that we can overcome these challenges is you break down the assessment into a smaller and more manageable task. So that will help you, make this assessment less daunting, and you can identify very specific areas where you can allocate your resources, the limited resources that you have. Or you can use a variety of data sources that can give you a very, very comprehensive view of the risk, and then you can identify the risk which needs to be acted immediately or which are not so in the priority. Then get all the different stakeholders involved. So the more all the relevant perspectives are considered when you are kind of building and assessing these challenges or the processes. And also you use the risk management framework, like, are you doing in a very more systematic manner or a constant manner? Another, I think nowadays, one of the constraint or the challenge can also be technology. I think we can leverage technology to automate a lot of tasks. This will save a lot of time and resources. And this will also ensure that whatever assessment that is that we're doing, at least with the help of AI or machine learning or the technology, it is getting done in a much more efficient and a robust manner. And then you are just when you're breaking down, you're just kind of helping you to identify areas where you can process which are the those specific area which needs improvement. So that's there. So you prioritize your task. You can use the risk-based approach, do the cost benefit analysis, which will help you mitigate a risk, whether it is more worth the potential benefit. Look at what are the opportunities that are there where you can share the resources within an organization, and definitely use the technology to automate the process. That can definitely help a lot.
Right. Thanks a lot, Ekta, for that. I think we are now almost out of time. So Anthony and Ekta, thank you so much for joining us today. And I hope the audience gets in touch with you via LinkedIn or via some follow-up questions, and you can possibly answer those directly. We have a few upcoming announcements at Fintellect. So we have our Nepal workshop coming up. So those of you who are attending today from Nepal, 22nd of August is our workshop, a full-day workshop on AML KYC process audit. Feel free to contact my colleague Oliver to register for that, or go to our website. I've posted the links in the chat box. We also have our next Philippines Summit, which is now scheduled for the 3rd of October. So participants today from the Philippines, do go and see that link and see if you'd like to register for that summit. And obviously, for those of you who are interested in the FCAP certification, our next batch will be held in Thailand, in Bangkok, on the 26th and 27th of October. Again, the link is posted if you would like to get more information on that. Also, as usual, visit the Fintellect YouTube channel if you want access to more than 300 videos and recordings. Again, a sincere thanks to the Asian Bankers Association for participating and partnering with us for this webinar today. Thank you to Anthony and Ekta again, and to the audience, have a good day, good morning, good afternoon, good evening, wherever you've sort of logged in from, and I hope to see you next month at our webinar again. That's me signing out. Bye for now.
Thanks, Trish. Thanks, everyone.
Thanks, everyone. Thanks.
Bye.